Let's talk about 2020. It's been a very difficult start for everyone. There's been a market reset. We've obviously got the coronavirus, COVID-19, affecting people's ability to work. You had a strong start, but how's it gone since then?
Well, as you say, we before the virus actually really started impacting in Brazil, we had a very decent January. We then had a bit of a tough February because we had a mill go down on us. But fortunately, that ore source I talked about earlier was really our salvation. The beauty about this ore source is it takes waste out and allows you to basically high grade material going to the plant. So it gives you a catch up facility in a plant constrained operation. So we had a phenomenal March and a phenomenal April, our two best months on record, in the middle of all this virus too, which was pretty surprising because I remember sitting at PDAC in March thinking we don't know how this is going to go. I don't think anybody thought in PDAC how bad it was going to be, but I did suspect it was going to be tough. And but you know, after that, March and April, two phenomenal months, and say our best months ever, 30. So we finished Q1 with 9,000 ounces, which is a very respectable number, and our target was 10. And our budget for the year this year is 45,000. It's actually 20,000 ounces by the end of the second quarter, and we have a stronger second half of the year. I know I spoke to you about 3-4 weeks ago. You know, we're not going to be able to make our 10,000 ounces in our second quarter, but we're doing well. We're going to probably do about 8,000 ounces. We're doing pretty well, and I think all things considered, that's a tremendous effort. The reason we're not going to do that is what we actually did in anticipation and with what's actually happened with the virus. We decided being a camp. We just wanted to get everybody that wasn't really critical to the operation off the site, just to reduce risk. That allows us to socially distance everybody. People have much better sleeping arrangements, better sort of eating arrangements. We just basically thin everybody out so people have got space. Just good common sense. So we haven't got the optimal workforce there. We've gone, for example, we have a workforce of about 500 people. Normally we have about 350 people at site. We've now reduced that to 250 people. So therefore, it's unreasonable to expect we can actually have normal production with that level of people. But those people who are there are just purely on gold production duties. That's it. And they're doing a fantastic job. What we've actually done, we've kept people there. They've brought the union has been tremendous in terms of cooperation. We've managed to have people working much longer stints than they normally would. They want to do this. They want to spend more time at site, then more time away. And we've been rotating people through with quarantining. Anybody new coming to site gets tested for the virus. And as long as they're symptom-free and negative, obviously, they come in and allow people to leave. So we feel we can maintain a level of production of about sort of 7,500 to 8,000 ounces quarterly. So not as high as we did, but that's a decent effort, all things considered. And I would say we've enjoyed, obviously, fantastic economic tailwinds with the gold price in terms of dollars and in terms of the real exchange rate. So we might not be producing the ounces we thought we were going to produce, but we forecast our cash position to be at the end of Q2 to be about $6 million, and we're going to be well above that. At the end of Q1, we probably had about $3 million more in the bank. We ended Q1 with $9 million in the bank. We thought we'd have $6. So we're actually, our cash position is great. And the great news is at the end of this month, Sprott, who have been a fantastic debt partner for us for many years, are gone. They're out, finished. We are debt-free, completely debt-free. So we're going to be a company going into Q3 debt-free. We also managed to renegotiate the purchase of Coringa in smaller parcels rather than actually paying the trigger payment of the outstanding $12 million that we still owed them to finally purchase all of Coringa at the end of March. We renegotiated that, and we're paying them in $500,000 payments per month, which will go up to $1 million per month in July. But that's very affordable with our current level of production, etc. So it's all worked out quite well. So we've managed to sort of tidy up the balance sheet where we've probably got about $2 or $3 million in the bank more than we thought we were going to have. We might not have the ounces of production, but we're getting better money for our ounces that we do produce. And we do feel that we can actually continue as we are, sort of 2,500 ounce months, so 7.5, 8,000 ounce quarters in Q3. Q4, well, you know, one would like to think we can do a little bit better and things will we can man up a little bit more and get back to a more normal quarter in Q4. So whilst we might not reach our guidance, as I said to you before, we're hopefully going to make a pretty decent stab at a good proportion of it.